Everyone, welcome to this session. My name is Benjamin. I'm here with Derek for about an hour. If you are in the chat, feel free to ask any question, either on the YouTube chat or on the XM Live chat. Hey, Derek, how are you?
Hello, nice to see you, Benjamin. After 1 week break, many things changed during that week. We saw elections in Japan that have impact on yen. We saw also some things changing on gold. Mr. Trump is also not sleeping. He tries to shock us with some new informations, new propositions, or new ideas. Anyway, today also we have something which, thanks to Mr. Trump, is on Wednesday, not on Friday, because we know that the Democrats and Republicans couldn't agree about the budget, and we had a small shutdown again of the government. They didn't release the payrolls data on Friday as usually they should do, and today we'll have the payroll. So I must say that I would like Mr. Trump to make this every Friday. They shut down the government and we'll have payrolls on Wednesday, because trading on Wednesday payrolls might be much more interesting than on Fridays, because on Fridays we don't have much time before the end of the session. And here we have still 2.5 days of trading under the impact of the payrolls. So I think that we could write a petition to Mr. Trump. Please do the payrolls always on Wednesdays.
Not sure Trump will do what we want. He kind of
No?
usually does what he wants.
But let's try.
Yeah,
Let's try.
yeah. I mean, yeah, a lot have changed, and I still feel similar to the past few weeks, basically, that the markets, the US equities are a bit shaky, in my opinion. Like we did have a correction last week, which was about heavily in on Friday. I mean, on Nasdaq and S&P, for example. I'm still not sure this is the end of the correction yet. I kinda expect continuation of the correction until end of Q1. Not necessarily like a huge crash. I'm not like a doomer expecting major correction, but I still think we we may range or continue the correction until the end of Q1. When I see this kind of chart here, for example, on Nasdaq, this is ranging for now how long? For maybe more than 3 months, actually. It's more than three
Yeah,
months that
yeah.
we are ranging
Hmm.
in this like 24 to 26K range on Nasdaq. The same is we can say exactly the same for S&P, yeah, by the way, like for about about 3 months. Usually, I would expect a retest of the low of the range, kinda, before continuation up. So anything in this area here, like in this demand zone, or retesting this 200 daily EMA and SMA, and then I would probably go long and expect continuation up the rest of the year. But for now, this kind of ranging environment usually goes a bit lower, in my opinion, before continuation higher during the year.
Yeah, I think that most of traders see that level as a possible, because this was a double bottom that time.
Yeah,
And when there's a correction, everyone will say, "Oh, now they will go and test it once more." But market is last 3 days were very, very narrow
yeah.
range. Not much happened. It looks like the market is thinking over the situation. You know, from the indices I watch on the US 500 and German 40. Those are the two indices which I watch. Sometimes I trade them, but not so often. But in case of S&P 500, I have a kind of a funny strategy to trade it, and I will show you for a moment my screen,
Sure.
what I mean that is a funny strategy because it looks very simple, but it works.
The most simple, in my
Okay.
opinion, for the big indexes like that are just moving averages. And here, for example, if I just zoom out on S&P, for example, in purple, this one here, it's the 100. Each time we touch it, it's a long.
Yes.
Long
This.
with just a stop a bit above like last week or something, like last day or something, and then you can ride the trend. And here again, I mean, we did it. Usually, how it works though is that when we break one moving average, it goes to the next. So 21 to 50 to 100 to 200. So next time we break this area, I would expect the test of the 200 here, which,
The white one is 200. Yes.
yeah, the white one is 200, exactly, 200 EMA and SMA. And I would expect like this area to be touched, which is also this demand zone. So I would expect it to hold, except if there is like massive news. But unless that, I would expect the next test of the 200 to hold and to probably be a long. Like if we
Okay, so
go,
now I will show you my screen that
sure,
when we would add your moving averages to my screen, we will have a very good strategy. I'll show you what makes me open a trade because if in case of stock markets, I would only think about buying. I wouldn't think about playing the corrections. Even sometimes the corrections are very deep, but we know that the indices are born to grow. So
yeah,
the
they
corrections are
only go
only,
up.
I would call it some accidents on the way. So my idea is this here. You see, when I see MACD over the zero line, I know that it's a bullish trend, and we should go long if there's an opportunity. But the best opportunities to go long are when MACD falls below the zero line. This is the best opportunity because here you can see on this candle here, you could start buying. And also here, when you look at this moment, also it was a moment when price started climbing up. So generally speaking, now, if I would see a red bar here on the MACD, and they would go a bit lower like this, and then I would again see a green bar, I would believe that this is the moment to start buying. And it might be that it can happen either on this once more on the bottom of the channel, because it can go this way and go up, or maybe they can make this bigger dip and go like this. Of course, there's a third solution, that they will not fall and they will continue growth. So then I'm not joining the market so high. I will wait for
Yeah.
something like this.
Yeah, I agree that joining the market right now on the long side is a bit hard because it's hard to have a good risk reward in this area basically. Because if you go long, you will put your stop just below Friday's low basically, which was the last bounce. But then the last Friday's low, in my opinion, is a very easy target and could go like here very easily. So having a good risk reward right now is kind of hard on the long side. But yeah, if we revisit a bit lower in the next few weeks to like basically in Q1, I don't know, within a month, I think we should have like a good opportunity to go long. And honestly, also like the seasonality for S&P. Usually it's kinda only up, during all year, and the only time where seasonality is kind of bad for S&P is between mid February to end of March, basically. So
Why?
kind of
Why
F
is
end
it
of curve.
so? We don't know
I, I, I'm,
why.
I'm, I'm not I'm not sure if there is like a reason, but I
Uh-huh.
looked yesterday at I can find it again.
Okay,
Seasonality.
okay, if you can show us.
Yeah. Um, which one was it? Yes, okay.
Just before you
Uh,
find it, regarding the Bitcoin, you remember we spoke about this level here a week ago that they could hit it, and they not only hit it, they broke it, and now I think that 52,000, 57,000 is the target.
yeah, and
Oh,
they broke it and they retested from below right now.
yeah, they made something like this, and
Yeah,
probably they are going down.
yeah, the resistance. So yeah. So yeah, maybe I can just share my screen a
Yes,
few
yes, please.
seconds, like this. So this is the seasonality for S&P in the past 20 years, really.
Uh-huh.
So we can see that overall during the year, it's kind of only up. As you said, like indexes kind of go up every year. But the only sort of downtrend is during mid-February to mid-March
Uh-huh. Uh-huh.
on a seasonality for the past 20 years. And then yeah, yesterday, I also looked at VIX, for example, for the past 5 years. And for the past 5 years, during mid-February to mid-March-ish, you usually have a spike on VIX. So either it's a one-day spike or either it's like a sort of increase on VIX, then it comes down. But yeah, usually, and not sure if there is like really a reason behind it, but you do have like an increase in VIX, increase in volatility, and corrective move end of Q1 for S&P, and it's been like that so for VIX, I've looked myself for the past 5 years, and basically each year you kind of have a sort of increase of VIX. So of course you had in 2020 you had COVID, and then you had last year you had tariffs, and then you doesn't mean that I expect like anything that strong this year. But I
Why
kind of
not?
expect a
Why
weak
not?
test.
Why not? If Mr. Trump is here, why not?
Yeah,
Something bad can happen.
yeah, with him we never know, but unless we have like a massive news or maybe an escalation with Iran, or I don't know, like there are possibilities, you know. I kind of just expect a weakness in S&P during this time, and then probably from end of Q1 we can go up to continue the trend during the year. I would expect like 2026 to continue an uptrend. Like I'm not expecting a massive, parabolic move, but probably just a continuation of the up move, which means that I would probably look for, right now, I'm not looking for longs on S&P because I expect a weakness in the next few weeks. By the end of Q1, I will search for longs on S&P and Nasdaq and probably try to hold it for a good time. I mean, just ride the uptrend.
Maybe yes. Definitely, this is a bullish market with small dips, which are good opportunities to join the bullish market. So for me, correction is here an opportunity to go long, and not that there's a correction and go with the correction. You know, if we see such a huge bullish
Yeah.
trend like here, of course, it's tempting to trade the corrections because many people, it's a kind of a psychological thing. If something is going up, it has to fall. This is the something which people believe in, but not in stocks. On stocks, those declines are very short term. Stocks are against the physics,
Yeah.
against the gravity.
Yeah. I would expect, I would search for long if we have any correction in the next few weeks on the indexes, so
Maybe
S&P and
your
Nasdaq.
moving averages could be very, very good moment when they hit once
Yeah,
more
exactly.
the
Like here,
200.
for example, in the last 2 years, each time we tested so in purple, let's look at the purple, which is the 100 daily EMA and SMA. Okay, here bounce again. Okay, here it was a bounce several times before it broke, and when we broke, it directly went to the 200 and lower. But we had several times where we bounce on the 100. And what happens usually? You have like one or two bounce on the 100, and when it break, it goes directly to the
To
second biggest
200.
moving average, which is the 200 in white.
Hmm.
So I would expect next test of the white moving average to be probably about that. And if not, if we break below, then the correction can probably go lower, maybe to this level. Then we have to find other big levels, you know. But usually buying the moving averages, or is a kind of easy way of going long on S&P and of course on Nasdaq also?